Here's something nobody tells you. Recessions are not just moments of pain, fear, and job losses. They are also the greatest wealth transfer events in history. While the majority panic, cut their spending, and pull their money out of the markets, the smartest investors quietly position themselves to come out richer than before. Think about it. The 2008 financial crisis wiped out trillions in global wealth. But it also created millionaires and billionaires. People who bought real estate at rock-bottom prices, investors who picked up stocks at massive discounts, entrepreneurs who launched companies when competition was weak, they all took advantage of the chaos. And here's the truth. Every recession feels like the end of the world while you're living through it. People say, this time is different, and they panic. But history shows us the same pattern again and again. Markets crash, fear spreads, opportunities appear, and those who stay calm and strategic win big when the recovery comes. Now, don't get me wrong. Recessions are tough. People lose jobs, businesses close, and the headlines scream doom and gloom. But here's the key difference. While most people see only the pain, a small percentage see the opportunity. And that's the mindset I want to give you today, the ability to look at a crisis and ask, how can I turn this into a chance to build wealth? Welcome to Smart Money Daily, the channel where we give you simple, no BS strategies to save smarter, invest better, and build real financial freedom. In today's video, we're going to break down exactly how to profit from a recession, with practical steps you can start applying right now, no matter your income level. Because the truth is, the next crisis could be the moment that changes your financial future, if you know how to play it right. Most people hear the word recession and immediately think of fear. Layoffs, businesses closing, stock markets crashing. And yes, those things happen. But here's the part almost nobody talks about. Recessions also create the best buying opportunities you will ever see in your lifetime. Why? Because in a recession, prices drop everywhere. Stocks fall, real estate values sink, businesses get cheaper to buy into. And while the average person panics and sells at a loss, smart investors step in and grab assets at a discount. It's like a giant sale on wealth-building tools, but only a few people are brave enough to shop. Take the stock market, for example. During the 2008 crash, the S&P 500 lost more than half its value. People sold in fear. But those who kept investing, or even doubled down, saw enormous gains when the market recovered. A $10,000 investment in early 2009 could have grown into over $40,000 within just a decade. That's the power of buying during a downturn. Real estate is another example. During recessions, property values often drop because people can't afford high prices. Savvy investors who buy when everyone else is selling not only get better deals, but they also benefit when housing markets bounce back. Many of today's wealthiest landlords built their empires by scooping up properties during economic crises. And let's not forget business opportunities. In recessions, competition thins out. Weak companies close, leaving room for new players. Think of companies like Uber, Airbnb, or WhatsApp. All of them were built during or right after the 2008 crisis. They saw the opportunity where others only saw fear. The bottom line is this: recessions are scary, yes. But if you can stay calm and think long-term, they are also golden windows of opportunity. The difference between those who get crushed and those who come out stronger is not luck, it's mindset and preparation. So the real question is, will you panic like everyone else, or will you position yourself to take advantage when assets go on sale? Now that we understand why recessions can be opportunities, let's talk about how to actually invest during a downturn. Because it's one thing to say, buy low, sell high, but it's another thing to know where to put your money. The first strategy is stocks. During recessions, stock prices often fall hard, sometimes 20, 30, even 50%. That can be terrifying, but it also means that great companies go on sale. Think about it. Apple, Amazon, Microsoft, they've all been through recessions. Their stock prices dropped like everyone else's, but then they bounced back stronger. If you buy strong companies when they're discounted, you're essentially getting the same value for half the price. Second, and even safer for beginners, are index funds. Instead of trying to pick the perfect stock, you invest in a basket of companies, like the S&P 500. When the overall market falls, index funds fall too. But when the market recovers, and history shows it always has, index funds rise with it. This is one of the simplest, most reliable ways to build wealth long-term, especially if you keep investing consistently during a recession. Here's a key principle: don't try to time the market perfectly. Nobody can predict the exact bottom. Instead, use a strategy called dollar-cost averaging. That means investing a fixed amount regularly, whether the market is up or down. Over time, this evens out your cost and takes advantage of downturns automatically. And here's the big one: during a recession, don't stop investing. The biggest mistake people make is pulling their money out of the market when prices are low. That locks in their losses. The smart move is to stay in, keep contributing, and even increase your investments if you can. Remember, every crash in history has eventually led to new highs. If you're serious about building wealth, think of a recession like shopping at a massive sale. While everyone else is running out of the store in fear, you walk in calmly and fill your cart with quality assets at bargain prices. That's how fortunes are made. Stocks and index funds aren't the only way to profit from a recession. In fact, some of the best opportunities show up outside the stock market. Let's look at a few. First, real estate. During recessions, housing prices often fall because fewer people can afford to buy. That's bad news for sellers, but great news for buyers who are ready. Properties that seemed way out of reach during good times suddenly become affordable. If you can secure financing or have savings, buying during a downturn can set you up for massive gains when the market rebounds. Many of today's wealthiest landlords and real estate moguls built their fortunes by scooping up properties during economic crises. Second, business opportunities. Recessions clear the playing field. Weak businesses collapse, leaving room for new ones to emerge. Some of the biggest companies we know today were born in recessions. Airbnb, Uber, WhatsApp, all started when the economy was struggling. Why? Because recessions force creativity. Customers look for cheaper, smarter, more efficient solutions, and if you can provide that, you can thrive. Starting a business in a recession might sound crazy, but it can actually be the perfect time. And don't overlook investing in yourself. When the economy slows down, use that time to upgrade your skills. Take an online course, learn a new digital skill, or improve your financial literacy. Recessions make job markets tough, but the people who stand out with valuable skills become recession-proof. Think about it. The money you invest in yourself today could lead to a higher-paying career or even a side hustle that changes your financial future. The wealthy understand this. They don't freeze during a crisis. They act strategically. They buy assets, launch businesses, and double down on self-improvement while everyone else is paralyzed by fear. That's why when the recovery comes, they're miles ahead. So ask yourself, when the next recession hits, will you be one of the many who panic, or one of the few who prepare and take advantage? So now we've seen why recessions aren't just something to fear, they're something to prepare for and take advantage of. But here's the truth. None of the strategies we've talked about will matter unless you adopt the right mindset. The wealthy think differently during downturns. While the average person panics, the wealthy stay calm. While others say, "This time is different," they remember that history always repeats. Every crash has been followed by a recovery, and every recovery has created wealth for those who were brave enough to invest when things looked bleak. The mindset you need is this: don't see a recession as an ending. See it as a reset. A chance to buy assets at a discount, to start something new, to invest in yourself while others are frozen in fear. If you can keep a long-term perspective, you'll realize that downturns are temporary, but the gains you make by taking action can last a lifetime. Here's a simple way to put it in perspective. Imagine yourself 10 years from now. Will you look back on the next recession as a time when you froze and missed opportunities? Or will you remember it as the moment you stepped up, made smart moves, and completely changed your financial trajectory? That choice is yours. So here's my challenge. The next time you hear the word recession, don't panic. Prepare. Create a plan. Decide how much you'll invest, what skills you'll build, and what opportunities you'll look for. That preparation is what separates the people who get crushed from the people who come out stronger. And if you want to keep learning how to think like an investor, save smarter, and actually build real wealth, hit that subscribe button right now and join us here at Smart Money Daily. Every week, we share no BS strategies to help you turn financial uncertainty into opportunity. Because remember this, wealth isn't just built in good times. It's built in tough times by those who are bold enough to take action.